Hello, Warriors. Welcome to another live stream. My name's Dale Pinkert at TradeGate Hub. TradeGate Hub is a place where traders get together, share ideas, post charts, discuss it, and we bring in our analysts to give you some ideas and some actionable analysis to help you in what's a pretty difficult endeavor trying to learn how to be a trader. So I respect everyone who tries it, even gives it the attempt. Just want to let you know that you need to have realistic expectations, that you can't just read a book, How I Made a Million, Turn 5 grand into $1 million, and think you could do it. I mean, I've talked to people, done 1,000 interviews over the years, and the average answer, even what we got from Jack Schwager last week, was 4 years. Why should it be any different than if you're a plumber, electrician? You start off as an apprentice, then a journeyman before you become a master. And trading is the same way. A lot of it has to do with just having the experience and living through things and learning from your mistakes. We learn the most from our mistakes. No one's saying it's fun to lose money and make a mistake. It's just part of the process. How can you drive a taxi cab and never get a ticket or an Uber? So it just goes with the territory. If anyone's trying to sell you the secret to trading, run away, because the secret is there is none. It's just hard work and living through adversity. And if that scares you, find something else to do. So, getting to the markets right here. Hi, how are you? G. Dory, how's it going? Michael Venezia, Michael the Machine. Buckle up and drive safely. The only way to drive safely in the markets is to have good risk management, know where you're wrong. It's okay to be wrong. It's not okay to stay wrong and have a catastrophic mistake blow you out. So yesterday I was talking about, I thought that this could be a failing rally in the euro. That turned out to be the case. We never took out the high that we had from last week. This was pretty unusual bottoming activity. So I felt that, after this, that I could sell a rally, that it would be a failing rally. It extended more than I thought it would. So my entry wasn't, I didn't top ticket at 122.10, but took partials down here, good for about 45, 48 pips, depending upon where you sold it. And now you could trail your stops to this lower high. Okay, this is a lower high. Still my contention that we could still have one more shoe to drop in the dollar right here, and that there probably are some stops now for Euro bulls accumulating under these lows of 2133-ish, looking for those to be taken out. If you're not short, a decent area could be where I sold it originally, back around 2210, 2215, with stops over this high. If you want it tight, or tolerance of 20 pips over this high, which still would be a pretty small risk compared to the potential. Because if I'm right, I think that we have some moving averages that we could end up testing. Also, I teach a method called a two close reversal, and we actually got to it in the Euros 2181. On a weekly basis, you don't know if you have that reversal until Friday. But knowing that you had that, and we only took it out by about 15 pips, you could use these off numbers for buys and sells as markets come down to them or rally and approach them on the upside. So yesterday it was pound strength that carried the day, and pound weakness that carried the day, and the pound's trying to hold. And I got some questions from people. I don't have a position on it at the British pound right here. But to me, I think this was pretty significant. I have to say, stops give markets fuel. And I think the fuel, once we had the stop hunt yesterday or Sunday evening in the London session, um, ate up a lot of the fuel. So, I think that you could sell a rally in cable as well, maybe up towards this 142 level, 4180. So, and that eventually we could trade back down to the big round number of 140, 139 and a half extreme basis. So, all in all, the dollar is trying to put in a higher low. And if this is going to turn into some type of ABC, we should retest and take out this low, maybe head up towards 9060. Um, I have some moving averages coming in there right around here, around last week's high, a little bit above it. So anywhere between here and 90.90, and it's still my contention. If we do get a bit more of a push in the dollar, that we're still going to sell off from one more capitulation, cave in, puke the dollar type of sell off coming down the road. And I think the S&Ps are going to need it. Must have been asleep at the wheel because what a bag holders opening this was. So we opened up here yesterday. Great scalp. I just wasn't in tune after a long holiday weekend. I had one beer uh, over my birthday weekend. Anyway, so yeah, I would say that this is could be important. When the dollar goes up, it can put pressure on the market, and if the dollar has a little more upside, maybe there's going to be some more pressure. I did not pull the trigger on reentries in SQQ. I do want to show you though where it's holding. It's holding after this big rally that we had before we recovered, holding the 78.6 level. I haven't recommitted. I still think there's a shot for new highs coming up here. And in the NASDAQ or a retest of it. So still keeping my powder dry for a short in stock indexes. Looking over at US dollar yen, yesterday I said, I can't fade it. And let's talk about one of my tools, the real simple implicator. Most people call it the relative strength index. And when we had this breakout, which, it's trading on both sides of this pivot, we had a confirmed high up here. Okay. So when you have confirmed highs, you could get pullbacks, but they're normally not the high. So I would say if we had another push up in the end, and it may not happen right away, we could do this ABC down here before that happens. But I don't think this will stand as the high in US dollar yen. Any questions so far on the currencies that I'm talking about? All right, I want to move to the commodity currencies. And I have to say that Aussie was, short from 38. I took some profits and, I'm trailing, my stops are over 80. And that Kiwi is actually acting even better than, Euro. And I do think that it's going to be a long-term buy, but I still think we have to flush out these lows one more time. We'll see if that works out. So Aussie still short, although I am looking for important lows to come in the days ahead, maybe a little bit under, flush out these shorts under 76, 70 here. A lot of people call this a maybe a little head and shoulders formation here, and the breakdown and the move would measure pretty close towards more like this moving average, 75. But whether we get to 76 or we get to 75, I think it's going to be a buy that eventually takes out this high. So right now I'm just trading counter trend in the dollar. And then I believe there's going to be one more dollar route. Same in euro, that even if we pull back to these levels here, 120.50 or so, that we have the potential to make higher highs. I'm thinking at least take out this high. And if I draw this channel line for like a 3 drive, it looks like it comes in all the way up at the 27 level, maybe even 28 level. Let's take a look. 27. So I think there's a shot for the euro to do this after the pullback is complete. That's going to take the dollar sharply lower. But I just want to emphasize that what I'm doing here is not looking for a um, big break, like the euro bears that are looking for parity. I still think the dollar has some issues, and this is just a little counter trend stall, just a trade. And then I think we're going to make another high, and this looks like a 1-2, and the wedge line is going to come in all the way up here at 27.5. I know some people think that 25 is going to be enough. What's the difference if we get long around 120 and could ride it for 3 to, you know, I'm never there for the extent of the move. In fact, people say, Dale, why do you put long-term objectives? I do it just so I know the potential of the market. I usually don't have the discipline to sit for targets. I guess I took you never go broke taking profits too seriously, and that's my paradigm is to take profits, and that's why I booked profits last Friday. Uh, I was short euro last week as well, and I took profits near the off number last week down here. You could say it was lucky that I covered down here, and there's some of it, but we also had an off number here. And if I hadn't have taken profits, I would have given them all back. If I didn't book some profits here, I'd have less of them now. So again, my belief that you have to ring the register along the way as a trader and not just be all in and all out at a target, that the market gives you opportunities to generate revenue on your way to a target or an objective. So moving over to CAD, still doesn't look like a bottom to me. I wouldn't rule out if I'm right about the dollar and Aussie that we could get maybe one more rally up towards 22, but 118 is looking more likely. Here's the wedge line that I have. Let's see where it's coming in nowadays. Everyone knows that, crude has been accelerating. I'll take a look at it now. It might be starting to peak. So it looks like we have a 119, 118 level coming down the road in USD CAD. So let's look at the 4-hour. And we'll have a little more accurate. 119, big round number. Think that we could go there, but it's mid-range. We could see 22 first, maybe 21.50 if the dollar has a little more oomph left in it. We'll see. One thing I will say is the willingness for people to sell the dollar here and here so far too. And in the euro, I mean, it didn't take much of a pullback for people to come in and just gobble up euro. So, there is a big willingness to sell any rally in the dollar. There's extreme bearishness in the dollar. And that's why I'm looking for just a little shakeout to temper that bullishness. Let's move on to the gold. So yesterday was an important day in gold, and if you're watching us on YouTube, um, there's a lot of posting going in at TradeGate Hub, and I showed this chart, and that was yesterday, and how important yesterday's low is in gold. Okay, and I think that we're going to make a new high. I also wrote about that for one reason. I think that we're going to have a divergence. I'm still stalking the 1920 level. I may have been premature of calling the end of this gold silver ratio push, but looks like it's rolling over again. But I want you to take a look at gold here, successive higher highs, right? And I was always taught that the shares lead. So take a look at a couple of the miners. AOU, not exactly, amount is not exactly a blue chip, but it has not made new highs. GDX is well-known ETF. So look at gold, successive higher highs, and look at GDX, sideways, hasn't made a new high. So if we get this rally to 1920, another 13 bucks or so, 14 bucks or so in gold, we should get this push for one more high that will not confirm. You see these highs right here? They're confirmed highs on GDX. And here's Newmont. Mike Venezia calls it best of breed. Hasn't done anything wrong yet, but it has been moving sideways and not making new highs with gold. So anyway, the miners are giving me a little bit of a tell that they're not participating with the bullion move. So even though I believe there's one more push up in the miners, it's going to take another new high in gold for that to happen. And I'm going to try the short side up there. Okay. And, I don't know what it's going to turn into, but if we do start to take out these lows at this 1880 level right here, 1890 level, that was the low that we had yesterday, 1891, there's going to be a problem. And I'd say there's a lot of stops underneath the market. This is a key level, and this could be another stop hunt. And then, this is going to be the big area, this 1860, 1856 level. For the bullish case in gold to continue, we need to see any pullbacks not close back under 1860-ish, 1856. Everyone with me? You can always ask questions if you're here on the platform. There's no such thing as a silly question, only stupid answers. So feel free anytime to interject. If you have an alternate view or another chart, you could always post right here in main chat and collaborate with me. So don't isolate, collaborate. Silver, about on par with strength and gold. Um, it gave up the ghost, so up here. So silver still acting okay. I'd say there's problems back under this 2760 level. And when I look at the weekly, I know it's a little messy, but what do you see here? You see a double top? Well, this high was actually above this high. So there was a stop hunt and we had one heck of a sell off. Maybe we're going to get one more high up here for a 3. It's the possibility. So we'll see. So far, stalling up at this 78.6 level. Okay, so just something to keep an eye on. To me, the gold trade looks cleaner than the silver trade, and the gold silver ratio is kind of a push. Really, it's gone nowhere since February, and especially over the last 7 weeks, really range bound after one of the biggest moves I've seen in my career, from when you could have gotten 130. 1 ounce of gold would have given you 130 pieces of silver, and now it's 68. So I'm conflicted between maybe a bear market rally continuing with the close over 68 and a half, or one more flush washout back under 60. Um, Very interesting chart in the VIX. Okay, so we were talking about before the S&Ps came off that the VIX was putting in a good day. We started to have this candle right here. And this is your pivot point at 19. So when I look at this on the 4-hour, I see the potential of 1, potential of 2, 1, 2, and then one maybe one more low under 16 if the S&Ps can get going. But if that doesn't happen, you have to use this 19 area pivot. Look what happens above it. We get some moves underneath it, not as much downside, more this time. But even here, we held it on a pullback and got one more pop. So you even have some moving averages converging here in the VIX. So I'm on VIX alert. I'd like to see one more drive, this something like this, and maybe even some VIX calls. So let's take a look at this. Okay. So yeah, Mike, if you're in the room, Mike's adding a position here. So to me, it looks like we're gonna right around 15 would be a third drive, where maybe you look at some September 20 calls or something like that. So there you go. Keep an eye on the VIX. If we pull back, the S&P's rally from here, see what happens if we could get to 4,300. I would think that a move to 15, 1470 in the VIX should be a layup. Oil hasn't been able to take out yesterday's high. It is possible that it's way overdone as far as sentiment, but we still have a confirmed high here on the 4 hour, again on the 2. So maybe some type of ABC. A lot of people really getting very bullish on oil. Tom Lee came on CNBC, thinks it's a hodl, actually, that the oil shares could be a buy and hodl. Or he's thinking at least 3 years. I think we've had a pretty good run. I'd rather not chase you know, the recent $7-8 rally and wait for it to pull back before I begin to hodl something. I've never hodled anything except some relationships and people I love. I don't do that with money. Anyway, so that's a look in the oil. I had a very interesting conversation with one of the market wizards, unknown market wizards, John Netto, and asked him about Bitcoin. And, Bitcoin's trying to turn the corner here, trying to turn the corner here. But, like I've been saying for a while, you may want the confirmation back above, get closes about above 40, 42,000, because, we could still have another another washout. This could just be marking time to work off its oversold condition and then have another break. But what I, excuse me, but what I got from John Netto today was he really likes Ethereum. He actually has a year-end target of 7,000 in Ethereum. So I thought I would throw something in for crypto enthusiasts. And John Netto was written about in Jack Schwager's book, Unknown Wizards. So tomorrow we have a great interview with Adam Button. Adam has been with Forex Live, actually was an owner for a while, and he's going to be with us. And Adam is very good at seasonals. He's a great trader. He's an excellent news trader. And last time I talked to him in April, he said it was going to be a negative month for the dollar, which it turned out to be in spades. He also said that risk on was going to prevail, which it did in spades. And he said that the real estate market was kind of crazy in Canada. And I said, well, it's already crazy here in the US. And he said, it's going to get worse. And I actually saw a tweet on Twitter with some house in Nashville. It's a teardown, offered up, listed at 1.7 million, and someone actually paid 3 million for a tear down. So there's a mania going on because of housing shortages, etc. Um, I never thought we'd have more of a mania than we had in 2008 in that last housing bubble, but this is a bigger bubble. And accompanying the bubble in housing is, prices inflating and everything. And one thing I want to leave you with, and I was talking to John Netto about this too, the narrative is that inflation is coming. We have an NFP on Friday, the employment report with a labor shortage. It's going to be important. And with this labor shortage, John's point is that lumber prices, having supply chain issues, they could be transitory. But he said wages, once you raise the wages, they're not coming down again. So, very few people, especially in this environment, would take pay cuts after they've gotten a pay raise. So that becomes embedded in the inflation expectations because once wages are raised, they rarely come down. So that means that inflation may not. That's a narrative from the Fed, from a lot of people that it's going to be transitory. Well, if you're out there getting raises and you're seeing hourly wages come out like on the NFP and they're going up, you know that inflation is here for a while as wages increase to attract workers. So everyone, I'll see you tomorrow for Adam Button. Good trading to you the rest of the day. And as I always say when I end every broadcast, money comes and goes. Time is gone forever. Make it count. And don't just count your pips or your crypto coins or your altcoins or your bullion or your silver bars or your shares. Count your blessings. Thanks for your attention here on TradeGate Hub. And I'll see you guys tomorrow for my conversation with Adam Button. And I know that he'll give us some heads up on what to look for this month during the month of June, which has just begun. So, uh, month starting off okay for me. Hope it is for everyone else. And I'll see everyone tomorrow. Adios.